All right. Hello, everyone. Let's take a quick look at what's going on. Well, I thought about it long and hard. Didn't really want to do it. There wouldn't have been a thing wrong with it. Here we had a nice change in behavior. We took these highs out and came back in. Um, this frequency we saw did have something to do with things in the past, so sometimes the second warning line can be a good place for a retrace to end. But I decided not to take it, mainly because it was still very rangy and it was a little bit sketchy. However, buying at 24 with a stop of 10 or so, maybe even a couple more, would let you risk around 15, 16 pips. And that is exactly what we want to look for. So, based on the amount of money that you would have to risk, or the amount of pips that you would have to risk, it's a pretty darn good trade. So, really, with such a small stop, probably should have just gone ahead and gone for it in spite of a few doubts. Anyways, didn't do it, so we don't want to spend a whole lot of time worrying about what we didn't do, other than recognizing it for seeing it next time for a new opportunity. Um, So, what can we do? Well, I like to draw in these new channels that form coming up off of nice bases like this. It's a nice multi-day base on this 20-minute chart. And it breaks out. And if we put the top of the channel here and put the bottom of the channel here, then we get some nice touches here on the back side of it. And then, sure enough, we come back and retest it on this side. So that, if you were up late at night, would have been an interesting place to buy. Put your entry here, you put your stop here, and that's a risk of somewhere around 20 pips, and that's pretty good. Where would you want to take your money? Well, that might be a little bit of a problem. We haven't done anything to disprove that we're done with this downward stair-stepping pattern when we scrunch everything up. So asking to take this out may be possible, but if you're getting involved up here, it can become very difficult to try to ride something larger, and you may end up you're setting yourself up for a scalp-like trade, whether you want it to be one or not, even if you expect it to take off later. The reason is that you can't protect yourself with your stop. You know, if we start rolling back down again, you're going to raise your stop up to here. And then if we start coming back down, you're going to get busted out to just a little bit over break even. So you have to really be thinking about taking your money when you start getting near these guys up here. At least the first time. You know, is it done? Well, maybe, because we did look at our longer term stuff. So the point is, the further up you chase this, when you have defined structure in your way, the more likely you want to be to take a small quick trade rather than trying to hold on for something really great. That way, if you do take this trade, you're going to make some money off of it, and if it does come back in your face, you're prepared to have your hand out again, because you probably do still think this thing is coming up, because again, we're still looking for this daily pullback to this moving average and this one-to-one switchback to work for us. So if I do play these top narrow breakout channels, I like to take them for a quick something. And also be very aware of news that may be coming out later, because new news can break patterns like this really easily. These are fragile 20-minute type type patterns that may not hold up to news unless all the news happens to go exactly your way, accelerating the market in your direction. So it'll happen sometimes. Everything happens, but I'd rather stick some money in my pocket and be prepared for uh, a larger trade if it came back down into here somewhere. Even if it came and took these lows out, the news may give us an opportunity later this evening, because there's a lot of news coming out in Australia and China, for this to have some kind of quick spike down, take these out, but then have all the buyers that are sitting around at the top of the previous range, which is this whole big coil here, waiting there with their hands out. So you get a spike through any near-term stops that happen to be in this, but you can not be as scared about buying them, because you're going to be coming into a one-to-one and the big daily stuff that we've been talking about for a couple weeks now. So that's a nice way to make money both ways. You get it for the near term here for a quick 30-40, and then you get patient and wait and see. The trick is if this just takes off and you get your 30 or 40 and you realize, oh, I could have gotten 100, you can't just go beating yourself up the rest of the day. You need to go look at another chart or stop trading if that really bothers you. If it doesn't bother you, and it shouldn't, then, well, you're going to be one step ahead of the game big time, because letting things like that bother you and chasing price can really mess your account up bad. Alright, so what do we do now? Well, we got our 40 or so pips. I'm not going to chase it up here. We can look at this sliding parallel. Yeah, maybe it holds, and maybe it takes off. Maybe it takes these highs out. Not really the most awesome place to initiate a trade, where you're betting on these little guys. If there had been lots of thrust in here and I was buying a little bitty pullback, then I would bet on the thrust versus this bit of structure. We're not seeing that though. We thrusted up, we coiled. We thrusted up, we coiled. We thrusted up, you know, these overlapping bars. Not very exciting. In that case, I'm not going to plan on this structure getting busted out. Now, it may get busted out, because anything's possible. But if it does happen, I'm not going to freak out. I'm just going to look for the next obvious trade for myself. All right, enough of Aussie. Yen, still keeping the stop here at 75, which is nice because it's underneath multiple levels of Fibonacci protection. This is the last clear defined swing. This is too close to the market. You might be able to get away with this a good chunk of the time if you raised your stop up. But we're talking about trying to get another 200 pips out of this trade, thereabout. So let's not crowd it. Again, what are we doing here? We are marching our stop up over clearly defined swing highs and swing lows. This to me is clearly defined. Nice up, nice down. This, not so much so. Kind of grinding up. Hard to say where you would want to hide behind. And that was that came from all the holiday trading in here just before Good Friday, during Good Friday, and during the Sunday trading session afterwards. So let's just be patient. If it comes up and takes this out, gives us a nice swing down, then we can go under here, so, and protect a little bit more money. Canada. Again, I said I want to see, actually I marked this poke low out. Well, it's legitimate now because we have made a new high. So if we'd see this taken out, then I'd be willing to go short again. Until then, I'm sitting on my hands and waiting to see how far up this thing's going to go. I'm certainly not going to try and buy into it to guess how much I could make between here and here or here or here, or whether it'll even keep going up again, because it's too likely to get shaken out of a trade like that without a nice defined bit of entry. And the tools that I'm using right now don't really show me a nice clean way to get in. And what does that mean? Well, if my tools don't show me a nice clean way to get in, it means there's no trade. My tools are doing me a favor. It's not my tools are broken. My tools are saying, hey, this market is not compatible with the way you want to trade. So take a break. So that's what we'll do. We'll take a break. No reason to push it. The market is not going anywhere. You might. You run out of money, you're going to be going somewhere. So definitely no reason to push it. All right. Talked about that. So, looks like our internals may be catching up to the rest of the stock market, which is what happens sometimes when you have these pullbacks. Sometimes they look a little weak and anemic. I would really prefer that the Russell would be leading everything. Because what it looks like now is, here's our expanding pivot that we thought it may have failed. It looks like it may be succeeding now again, and I kind of expect another new high sometime between now and the beginning of May. These expanding pivots are really tricky. It's really difficult to tell when they're actually over and when they're done. This is a good sign, I think, normally, of them failing. It's starting to, go in one direction, having resolved. But you never know how many times this back and forth action is going to happen. Normally, it's about 5 pivots one way or the other. 5, 4, 3, 2, 1. Or even 6, 5, 4, 3, 2, 1, depending on how minute you want to get with it. But that's pretty minute. So, if we get up here, we'll give a nice clean 5, 4, 3, 2, and then 1 all the way back here. It'll look really nice and pretty. It doesn't mean that it's going to roll over on our new, our new 5-point, but it's a good place to look for things to fail again and come back in, considering the amount of increased volatility we had, and the fact that stocks tend to go up towards the end of the month once they've had a big pullback like this previous. And into the beginning of the next month as new money comes in from everybody's retirement accounts and whatnot into the mutual funds. So let's watch and see. I'm expecting highs up in here somewhere now that we've gone and managed to bust this bid. Am I going to trade anything? Nah. Got plenty to do. Okay. So Canada we talked about. The ES. NASDAQ, again catching up. It hasn't taken out its significant last swing, but it may just be a matter of time. Now these things still are lagging. The ES is looking more like it wants to make new highs, while the rest of these don't. If that's what we do actually get, that will be a continuation of the warning we talked about yesterday. The warning is, when you have internals of the market not confirming what the major indexes are doing, watch out. Doesn't mean we won't make new highs. In fact, it often means we do make new highs. But the fact that we've seen large money rotating into uh, bigger blue chip type stocks and away from quote riskier assets is not usually a good sign. Doesn't mean high prices won't follow, but it does mean you need to wake up and pay attention. You want to see this correct itself if we have another leg higher. Otherwise, the next leg higher may just be a big chance to sell into. Right now, there's nothing we can do but watch and see. Alright, banks, kind of the same story. Not quite making it up near as high as the rest of the market has, or the major index, which for me the major blue cap index is the S&P 500, not the Dow. So, interesting area right here. I don't really think it's going to stop there. Why? Well, we missed this. So I think we're going to come up into here somewhere. We may make another new high even. Still, not the best price action. It's not nice and clean like, well, the banks have never been nice and clean, but let's look at a daily. A lot of this choppy, making new higher highs, but not doing it in a very pretty way. Difficult to trade. Blocky, big trading range between 2010 and the beginning of 2013. I bet we could measure this out a little bit better, maybe, and find if there's just a range doubling going on here. A lot of times you'll see these great big blocky ranges, and what they end up doing is just doubling out before they die. So it's I don't think this is a great example because it's kind of all up over the place. I see a smaller range in here with another smaller range in there. A lot of minutia makes it difficult to measure. So I haven't really been messing with the banks. The best thing I've got going for me right now is this median that I drew in. That had nice touches and nice coils around the median here, but it's so big, it's really difficult to trade off of. If this succeeds, then you expect it to go all the way up here, and that's quite a move. But really not out of the question here when we look at a weekly chart, which would be getting us right up into the 618 area. Easy to see why we paused here. Nice ABC of the very largest leg up and leg down, and a nice pause here at the 1-to-1. So not too surprising that things are a bit messy in the banks. Okay, gold starting to fall through this lower median line parallel. Again, not real bullish on gold. I kind of think we go sideways to down for a while. Alright, what haven't we talked about? Euro odd is starting to look like this sliding parallel may actually be important. We did melt down off of it a little bit. We're tagging these lows here. Might be willing to take a trade with a stop over here and an entry somewhere in here on this 4-hour chart. It's a 4-hour chart, so you got to risk some more so that you get the swings in there without, you know, getting yourself noised out. This is a good 70 pip risk, so we better make sure that we are set up to make enough money out of it. And honestly, if we go through this line, we might be making it all the way down here, and that's reasonable for a 4-hour chart because you'll be holding the thing for days for sure. I mean, that's over 500 pips to risk 70, so certainly pretty nice. What's in the way down here? Let's take a look, crunch it up. Let's see last swing lows. This last range. Range on top of range. Break into the old range. No sign of strength. That's why I'd be willing to follow this from here to here. Fortunately, it didn't work out so nice because of the holiday to make our channel trade on the hourly work out that wonderfully. But that's okay. We didn't want to get any trouble over the holiday. Alright, I think that's all I've got for this morning. So we'll keep it short there. You know, looks like Aussie may actually be finding its support here. This might be all we ever get. And the news this evening could actually be a new big blast off, but I don't really feel like chasing price. Because it's just not fun when the news goes rah, and then you're emotionally messed up and you miss a buy in here, which is a really great buy against an area that's been proven already. So I'm not going to bother to do anything. And we'll see whether we get exactly what we expect in this retrace to this median line on the daily. Okay, well, you will talk to everyone later.